The Goodbody Dividend Income Funds, also known as the GDI funds, are a range of 3 similar funds that offers investors targeted exposure to a diversified mix of traditional asset classes. The suite offers investors the option to modulate their risk within a suite of similar funds. Specifically, the funds are designed for a variety of investor risk profiles and can be used either on a standalone basis or as building blocks as part of a wider investment solution. The suite has 3 funds, 2 multi-asset funds and 1 pure dividend equity growth fund. A portfolio of on average 40 high-quality dividend-paying companies represents the engine of real return across the investment cycle across the full fund range. We like dividend-paying companies. Dividends represent a key component of the total return from investing in equity markets over the long term. Specifically within the GDI funds, we invest in dividend growth companies. These are companies that have both the capacity and propensity to compound attractive levels of dividend payout over the long term. Importantly, the Goodbody asset management investment process leads to the high conviction stocks that are used in these funds. These stocks are identified by an experienced team with a strong track record. In addition, within the multi-asset funds, we utilize other assets in order to smooth volatility and add diversification. These assets include fixed income, such as government bonds and corporate bonds. We also invest in publicly listed property. We also hold cash deposits, and we do have exposure to gold. There is an active asset allocation framework that guides the mix of assets in the funds over time. We employ an active asset allocation framework to tactically adjust the mix of assets in the funds over the course of the investment cycle. Importantly, the exposure to equities is managed within predefined limits, and these are explicit over time. There is a strong emphasis on consistency across the fund range. The equity holdings in each fund will mirror each other across the range. In addition, the asset allocation will tilt in the same direction across the funds. What changes over time is the equity exposure and therefore the total risk of the funds. Finally, our risk management strategy is a key differentiator across the multi-asset funds in the range. Specifically, we are looking to manage the downside exposure to equity markets and smooth the investment journey for investors over the long term. That reassurance is built in.